Does any of this reflect the fear, and I say the fear, I'm not trying to politicize it, of a Biden presidency, that he looks like he has a good shot at winning this thing? A lot of people already know in the market he's going to raise taxes, he's going to tighten regulations, the kind of stuff they don't like to hear. And maybe up until the past week or 2 weeks, they didn't think it could materialize. But now, maybe with the polls being what they are, the spike in cases, they fear it will. What do you think?
The market could absolutely, Neil, be signaling that a Biden presidency is well within reach. And why do I say that? Well, Joe Biden has talked about raising capital gains. So I think what you have right now is you have investors that are selling off in contemplation of higher capital gains next year. Let's take those gains this year while the rates are potentially lower. And Neil, putting on my CPA hat here, I always believe that people move with the tax code. So the promise of higher taxes along with more regulations on Wall Street is going to move investors. And I don't think it's a positive sign for Donald Trump what the market is signaling here.
You know, Erin, the economy is signaling other things. We just got a printout on the third quarter GDP, which was a record, up 33.1%. I know people quickly seize on the fact that just the quarter before it was a record tumult, down more than 31%. So they say at best it's a wash. But if you think where we ended the year and where we are now, that we're only down about 3 to 4% from those pre-pandemic year-end levels, that's remarkable in and of itself. The steady improvement in jobless claims, that's a promising development as well. The pickup in retail sales, consumer sentiment, Amazon hiring 100,000 workers for the holidays. These guys must be seeing a reason to do that. I'm just wondering if it gets lost in this argument with the spike in cases and all the other stuff. What do you think?
Well, I think part of it is you have to look at what happened in the third quarter was really when all the economies were reopening before we got these spikes in the cases. And so the real concern is, are these businesses going to be able to continue the same pace that they were in the third quarter if we have increased lockdowns in the fourth quarter and even into the first quarter of next year as we hit the winter? So I think, yes, we did well, but that's when things were the most open, and that's also when we had the most spikes. And you see this replicated in Europe as well as in the U.S. So it's unlikely that we're going to be able to maintain that type of growth and that rebound. Because remember, there was pent-up demand and pent-up, desire to go out to eat in the third quarter that we're just coming back and making up for what we had in the second quarter. So I think the fourth quarter is really going to show how we're going to manage this virus until a vaccine is widely distributed. And that might be a little disappointing. And that's why we're seeing the market react so negatively when companies miss just even slightly. Even if they beat earnings, they beat revenues, but their margins are going down, they get hit. There's a lot of fear. They get nervous,
and especially when those companies don't give it much guidance, right, Dan? That's the fear, that a lot of these numbers, I believe 7 out of 10 of them are better than people thought they'd be, but the lack of guidance that these companies are giving adds to the uncertainty, doesn't it?
Yeah, I think everything that's happening, Neil, right now is all being driven by uncertainty. The market can absorb bad news. Doesn't mean it won't be impacted, but it's uncertainty that really drives the volatility. And when you look at the big factors that are out there right now, COVID-19, where is this going? When will there be a vaccine? Will there be more lockdowns? Are we going to be able to learn to live with this? The outcome of the election. Look, Neil, we may not know who the president is for months. And when we do, half the country may be very angry about it. So there's uncertainty there. And then, of course, how about the stimulus? Because Wall Street is banking on there's going to be stimulus, especially if there's a
and we don't know. We don't know where that stands. We don't know where that stands. So quite right. Guys, thank you. Sorry to jump on you there with this break fast approaching, but that is a good point that Dan mentioned, the lack of stimulus, or that it could be delayed, if not outright denied. Is Wall Street giving up on Washington out? We're on it as we keep an eye on the campaign.